Chris Lyle. Welcome. This is a special edition of the Tour and Career Workshop. We just did our big annual event a few weeks back in early November, and we had our resident tax expert Joy Black join us that evening to talk about some of the things that have affected us over this past calendar year. However, even since then, there's been a couple other changes that we thought you should know about, and so happy to have with us right now Joy Black to tell us what's going on that's changing with our taxes this time around.
Hey, Chris, thanks for having me back today. Two big things are in the works. One has to do with actual tax reporting. As most of y'all are familiar with, if you are a freelancer, independent contractor, whatever label you want to put on yourself as a self-employed person, you are quite familiar with either receiving and or issuing what is referred to as Form 1099 miscellaneous. That form is the most common form used within the Internal Revenue Service. It reports a multitude of different types of payments to third parties by businesses. For instance, rent, what's referred to as other income. If you're an attorney, there's a special line for payments to attorney. There's a special line for payments to medical practices. But the biggest one everybody is familiar with is Box 7, non-employee compensation. Well, amidst all the other upheaval and uproar and uncertainty that has taken place in 2020, the IRS, in their infinite wisdom, has decided that, 1099 miscellaneous isn't succinct enough for us anymore. So we're going to resurrect a form that we discontinued over 20 years ago called the 1099 NEC. What this does is it splits reporting by small businesses into a 1099 miscellaneous with all the normal payments that a business would make that I mentioned earlier, except for non-employee compensation, Box 7. That has now been split out onto its own separate form. Well, that increases, in my opinion, or places an undue burden on the business owner, because they now have to get prepared and submit to the Internal Revenue Service two different sets of forms and hope that they get the right information on the right form. For instance, Chris, I know in the past you have rented office space. You also have independent contractors.
Mm-hmm.
So you have been able to send out one set of forms, one to your landlords for rent, one to all of your independent contractors. The only difference was where you placed the amount of money paid. To your landlord, rent went in Box 1. To all your independent contractors, it went in Box 7, non-employee compensation. Well, now you have to submit still the 1099 miscellaneous reporting the rent to your landlord, have its own a summary document, which is known as the 1096, submit that set of paperwork to the IRS. You then have to create a whole nother set of paperwork for the 1099 NEC and submit it with its summary document, the 1096. In my opinion, it's just going to cause a lot of confusion among the self-employed world, because they're going to get this mystery form and think it's not relative, or it's garbage, or it's junk or spam or whatever, and toss it.
Right.
And not realize, oh no, that specific information has to be listed on my tax return for IRS matching purposes. And even though they may have reported all the funds that they got 1099 NECs for, when the IRS, if they don't list those forms specifically on their tax return, especially if they file a Schedule C, when the IRS computer goes back to cross-match what's on the tax return to the forms that were submitted to it, it's going to kick out a mismatch letter. Because the IRS computer is not smart enough to determine that even though you reported $115,000 on your tax return as your gross income, and you have $100,000 in 1099-Cs, but your tax return only shows $85,000 of income from NECs, but the difference is still reported.
Gotcha. Wow.
And
Okay.
you're going to have to go through the hassle and the aggravation and the frustration and expense of either your personal time or paying a tax professional to argue with the IRS that, yeah, it was in fact reported.
Gotcha.
And
Wow.
to me, it's an unnecessary hassle. They're not going to gain any more specific information by splitting the form and bringing back into existence the 1099 NEC than they are already capturing from the 1099 miscellaneous box 7.
And in your opinion, and to your knowledge, is this a 1 year change or moving forward for good?
Until they change it again.
Okay. Gotcha. Gotcha. Well, that's a pretty significant change as someone who does a lot of 1099 reporting and receiving. Like that's a very significant change that we all need to be aware of. So, thank you for making us aware of that, and hopefully we can all be very organized going into tax planning next year and getting our documents correct and straight for sure.
Well, and one other thing I want to emphasize that a lot of self-employed people do not know is that all reporting documents, whether it be W-2s if you have employees, if it's 1099s that you're required to issue, now being a 1099 miscellaneous and or 1099 NECs, those documents must be submitted to the Internal Revenue Service no later than January 31st, 2021. It's no longer they have to be postmarked and sent out to the recipient and then sent to the IRS at a later date. Everything is due January 31st of 2021.
That's very important to note because yeah, I'm one of those that unfortunately waits to the last minute, and so they want them in hand by January 31.
Yes.
Yes. Okay. Very good to note. So thank you for getting us up to speed on those changes. And I understand there's something else that's changed that a lot of us that might have gotten a PPP loan should be aware of.
There is and I will be rather blunt in my description. The basic way to put it, or the simplest way to put it, is that when Congress wrote and passed the original aid package, I think it was called, the acronym for it's the CARES Act. When they originally passed that, which brought into creation PPP loans, they say their intention was that even if PPP loans are forgiven in full or to the extent, whatever extent forgiveness is granted to the recipient, that even the funds used to pay qualified expenses in order to obtain that loan forgiveness, those expenses were still to be deductible by the business in the year the expenses were paid. However, when the IRS issued their God complex edict of regulations, they said no, any expenses paid by forgiven PPP loan funding are not deductible.
Okay. So to use a practical example, and we used my office rent a while ago, which I understood was something that was able to be covered during the original.
Correct. A portion of it, yes.
Yeah. And so what you're saying is I can now, for the IRS, not also deduct that from my.
Correct.
Okay.
You had to do an offset to zero out the portion of that, whatever PPP loan expense, whatever PPP loan forgiveness you received for your rent payments, zeroed out the rent expense.
Okay.
So, for example, if you paid $2,000 in rent under the covered period, but you weren't allowed to use that full amount of money because it was a lesser percentage for PP loan forgiveness. So you only got $500 in PP loan forgiveness. Under the current IRS regulations, your rent deduction is only $1,500, even though you report on the 1099 miscellaneous to your landlord that you paid him $2,000.
Got you. And you made a point earlier that this is Congress and the IRS are not on the same page here, right? So
exactly.
who do we listen to at this point?
At this point, the IRS,
Okay.
because they're the ones who control the processing and administration and audit of tax returns. The last information I had last week from my professional liability insurance company was I was to advise any of my taxpayers who had received PPP loans until this situation was worked out between the IRS and Congress that they had two options. They could file a return not deducting the expenses, and then in accordance to IRS regulations. And if Congress forced them to reverse that regulation, they could then file an amended tax return, which is going to cost them more money because I, as a preparer, and I don't know of any other preparer, I'm not going to do amended returns for free just because the IRS had to backtrack.
Yep.
Or they're going to have to file an extension until this piss and match between Congress and the IRS gets resolved.
Gotcha.
Which puts, a burden on my profession because, hey, if I've got 45 people that got PPP loans, that means I've got 45 additional extended returns that I have to process at a later date. Well, as of noon today, if it goes through and if it has the teeth that Congress intends it to have, the last round or the newest round of relief under COVID, if it gets processed and pushed through, it's supposed to tell the Internal Revenue Service, no, this is not what the intention of the law was. So therefore, you eat crow and you reverse your regulations, and it will stand that any allowable business expenses paid for using forgiven PPP loan funds are fully deductible.
Gotcha.
So until the ink is dry on that, whenever that might be, we're all in a holding pattern, just swirling around the drain, waiting to see what actually comes out.
Gotcha. So with everything you've shared with us today, it's going to be very important that when individuals go to file their 2020 taxes, that they understand what the latest greatest is on this, because that has pretty big implications on their tax return with extensions or not. So it's going to be very important to either work with your tax professional or do your own research and understand exactly what the law is at that time. Correct?
Yes.
Okay.
And also be aware that, yes, again, for the third year in a row, the IRS has revised the Form 1040.
Of course, it's 2020. Let's get weird with it, right?
Hey, so much for simpler postcard tax return.
I know.
There's never been a bigger oxymoron in the American business world.
Oh my goodness. Well, you know what? As always, we really appreciate your expertise. As you know, for our viewers in particular, this has been a very difficult year financially, and just the insight you have is very valued, and we appreciate your time and sharing with us for sure.